Hold on 10 seconds. Good afternoon, everyone. My name is Abby Carlson. I'm your host this afternoon. Welcome to the July Global Wheat Market Outlook. We have Mike O'Day with us today. We're both in the Kansas City office. Good afternoon, Mike. How are you doing?
I'm good. Thank you, Abby.
Awesome. So Mike's going to go ahead and go through a PowerPoint. If you guys have any questions, we're more than happy to take them. At the end, we can do some Q&A. So you may see in the top right-hand corner of your Teams a tiny little question mark, and you submit questions anonymously, and I'm sure Mike would be happy to answer anything. So Mike, take it away.
All right, let's go ahead and get started. Yeah, I thought we'd go ahead and do the global wheat outlook this week, since we got the July WASDE numbers out. Get that out to you guys so we could take a look at it. It's kind of an interesting report. We got our first by class breakdown from the USDA by on the by class stuff for the U.S. wheat. So let's kind of get started here. Hopefully, there we go. And as usual, I have to put up our disclaimer because we are a publicly traded company, and I'm supposed to leave this up for at least 60 seconds so everyone can read this quickly and understand that this is a disclaimer, and we are disclaiming what we don't want to talk about. So we're just going to keep moving. All right. Go ahead and get started here. This is the way I like to look at the market, and I've changed some things up since the June report, which not much, but a few things. I still continue to view the most bullish thing is headline risk, and we saw some of that today with the end of the Ukrainian grain export corridor, bringing in some buying today. It's funny, we were down the other night on it, but we were up this morning. But it does sound like we had China come in and buy some corn today too. So that rallied the corn market. Crude was higher today. Wheat had its own fundamentals to trade, but overall it was a big day for the markets across the board. So we have our headline risk. We got that today. Major exporter carryout is going to become a bigger factor through the year, and we'll kind of get into that. But it's still one of my number ones. Most bearish remains Russian, EU crop, big crops, big exports. That's not going to change. We're going to see the FOB cash markets continue to stay very cheap. And I think the Russians are probably going to have to do some things to offset the political and PR exposure from ending the Ukrainian grain export corridor. We'll talk about that. But the one thing we have heard is they may take the tax off exports to friendly countries. So does that mean Egypt and India can both buy really cheap Russian wheat since they're a friendly country? We'll see how that evolves. But most bearish thing, I think the funds now are actually maybe even a little positive, but I kept it neutral. They covered their short position, and we'll look at that. I don't see them getting long, but stranger things have happened here in these markets, the short term. One bullish thing for me is this Canadian production. We'll get into that pretty close. U.S. production stocks were neutral. Could be a little bearish, but for now I'm just going to go neutral. World demand, I still question the USDA's increase in global demand, but for now we're going to keep that as a positive. But we're just not seeing the export business show up, and we're going to need to see how that evolves through the next 3 months, 6 months, to see if this export market's going to be able to get rid of all the supply we have from the importers. Weather risk and quality still a problem. Like I said, we've got Canada. That's a problem. We've still got some issues with potentially Russian spring wheat, but we've seen most people gravitate toward that 83 to 85 million metric ton production number. The U.S., we've got a little bit of a problem with hard wheat. We're going to have to see how that spring wheat evolves, and we've got a little bit of problem in Ontario on the soft wheat. But quality and weather risk remains the long-term driver, and we'll see how this plays into new crop acres going forward. Talk about market structure real quick. The only thing that's changed is the funds significantly cover their short positions from the last time we looked at this chart. This is the net spec positions from all the futures markets combined, Matif, Chicago, KC, Minneapolis. And you can see they were close to 200,000 short combined just at the beginning of June or the middle part of May, and covered that in. They're still short a little bit. We'll see where they're at on Friday on the COT report. But clearly, the selling through here was a function of the Ukrainian grain corridor. Every time that the corridor was initiated or was extended, it gave the funds a green light to sell it, and they did. And this selling distorted some of the intermarket spreads too. But now we're seeing this market recover with the short covering that we've seen the last couple of weeks. Like I said, it'll be interesting to see where they're at in a couple of weeks. I don't see them getting long, but we'll see if they just get back to even. Really no reason for them to sell it down here until we see how the corn and the bean markets evolve globally. The U.S. dollar has been a bright spot for the commodity sector in a whole. This is a weekly USD chart. Are we seeing new money come into the market because of the weaker dollar? The inflation has been easing, but the weaker dollar does help out U.S. exports, not so much on wheat, other than to our inelastic demand, but it can help us export more corn, and will definitely help us on the product side on bean products. So you take that weaker USD, we got inflation easing. So are we seeing new money come into the market? We are. This is just the combined hedge and index fund net ownership of corn, soybeans, Chicago wheat, and KC wheat. You can see how this has moved up the last few weeks. Nowhere near it was on its peak back in March of 22, but nice recovery from the lows we saw earlier in June and May and June, April, May, June. The question is, what's the function of this money coming in? Is it simply, the weaker dollar? Is it the idea that we're going to see inflation continue to ease off? I think that's part of it, and it's been a pretty good move. We'll just have to see what the dollar does going forward. Kind of looking at the funds structure. Chicago wheat on both these charts. Blue line is the managed money. That's the funds. You can see how much they short covered. The blue is the commercial. The commercial was long when the funds started short covering. The commercial sold it to them, and now they're short. I put the index. This gray line is the index of the swap dealers. You can see that's been pretty steady. I would like to see this probably start to move a little higher, as we saw back in here with the index fund buying that was associated with the fund positions. Then the next chart on this next side over is just soft wheat, the fund positions themselves. Brian and I were talking about this the other day, and he made a really good point. You could just see this is the long side of Chicago in the fund side. It's been real static. So they've had a position there, but they haven't been adding or taking away from it. This could be a lot of intermarket spreads against this too. And you could see the short side of the market and the net. The short side is the orange. Clearly, they've covered that, and the net has moved back higher. Just a quick look at KC. Same chart. This is the commercial, the light blue line. The fund continues to be a little long in KC. I think we associate a lot of that with intermarket KC Chicago spreads. And the index fund's been pretty flat. Now, the one chart we did see a big move in was Minneapolis. Now, Minneapolis does see limited fund participation, but you can see that they were short and are now long. And this is all associated with this Canadian weather issue and the U.S. Northern Plains issue with spring wheat. The commercial was long. As the funds bought, he sold it to him. The commercial did, and now the commercial is short. That's probably going to be part of the farmer selling we're going to see coming up if we continue to rally this market. Looking at the index funds as a whole, talk about this money moving into the market with this weaker dollar and the inflation coming out. We did see a spike up in the index fund long, but it's starting to come back down again, even though the Fed rates have been steady, but we're going to continue to see small increases there. Open interest, I like to show this chart. It just shows just a lack of participation. The left chart is Chicago wheat, back down near the lows of last year on open interest. KC wheat, similar situation. If we start to see this grow this week, we'll look at it. This could be a pretty good sign for the market that maybe we put a temporary bottom in the market. But we'll just have to watch how this open interest evolves. Volatility is not doing much. You can see the IV, Chicago wheat's the top chart. We're still running around 40% IV or implied volatility. Nothing fancy there, but it's been flattening out. Kansas City still running about 40% also. Little spike up, earlier last year, and we flattened, or earlier this last couple months, then we flattened back out. So vol's not really telling us a lot to me on this. Could look at the skews on the options, and we'll do that the next time we do this. I didn't have an updated this chart, but I'd just like to show it for people that haven't seen it, that maybe are the first time. Cost of doing business is a lot higher interest rates, but also, the exchanges have raised margin requirements. So the cost of doing business is just higher. This was the spike up from the initial Russian invasion of the Ukraine. The exchanges self-regulate themselves by raising initial margin rates. That's one of the blow-off functions that you can keep people out of the market if it costs them too much to trade. So we'll update this chart the next time, but I don't think it's going to change much. Just a quick look at world wheat, and then I'm going to get into the U.S. stuff. Main change from the WASDE report was probably just the shift in world global production. The U.S. was up a couple million tons. We had a small increase in North Africa, but declines we're seeing in Argentina, Canada, EU, and these are all exporters, right? So the world was down a little over 3.5 million metric tons, but of that 3.5 million metric tons, it was exporters. You can see the top 4 wheat producing countries. Like I said, this is the chart I'm going to pay the most attention to going forward. Even though the Russians are going to continue to export a lot of wheat, 4 to 5 million metric tons a month, as this supply shrinks, it does limit the ability for people to buy wheat outside of that region, whether it's the EU or Russia. Now we had a decline. We're down to 14% carry out to use, and we're getting close to the all-time low that we saw in 2007 of 13% carry out to use. And the thing is, statistically, this chart will change going forward. We're probably going to see smaller Canadian crops. Not sure on Australia or Argentina. EU, US are probably okay where they're at. May see a few minor changes between Ukraine, Kazakh, and Russia. But from a statistic point, this is probably going to continue to work lower, and that's what people will watch. We like to talk about the cash markets, the micro picture of the market. The bigger picture is this is what a lot of the speculative type guys are going to be watching. I updated this just quick. I think it's a fun little chart to think about. We look at world stocks to use comparison. We divide the southern hemisphere with Argentina, Australia, Eurasia, and then we look at the US and Canada. Eurasia in the southern hemisphere on the decline, slight increase in US and Canada, but that was off the US increase in production. And if we drop the Canadian production where I think it's going, that chart will start its downward trend again also. Just a real quick look at the importers. Not much has changed. The only thing we saw was North African imports increase, but Middle East imports decrease, so it was a net wash. But the trend continues to be higher. This is production on the production side. North African production was up, Middle East production was down. But the trend for imports continues to be on an upward path. But like I said, this is the question we really have to ask ourselves. Is the USDA right on this increase? We talked about this in the last report we did at length. You see increases in world demand, but then you see destocking across. And that's what we saw last year was high prices, less usage, markets using up what they have. So we're destocking, we're restocking here. You look at how that domestic consumption was spread across the market. China was in for 2 million more tons, and this was feeding. US was up a little bit, but Canada was down, Nigeria was down, Australia was down. So Let's see how the USDA treats this going forward in the August and SEP reports, and see if they continue on this higher glide path on the demand side. You can see the 4 largest domestic wheat using countries. This is China, this is the EU and India, and Russia down here. Through this in there, we've had a lot of talk on flour prices, and on this demand side, what's keeping buyers from buying wheat. And so we grabbed this from the Bureau of Labor Statistics in the US, and we just made our own chart looking at the flour price index. So wheat flour prices spiked up through COVID, have come back down, spiked back up. Now we're starting back up in this trend of higher flour prices going forward. Let's see where we're at in a couple months on this, but it's part of the CPI when we look at it. And kind of wanted to look at how food, seed, industrial consumption was going in the U.S. compared to the EU. We know the U.S. has been flat for a long time, but a definite upward trend in the European Union over the last few years. And that's interesting when you think about the demographics and the population shifts that we see in the EU. Feeding, the big thing was China. We increased 2 million metric tons. The USDA didn't put it that way. Now, they had a real problem with their wheat crop. We saw our team in China put out a pretty good report on Monday talking about a decline in the wheat crop over there, but the biggest thing is a lot of quality problems. So there could be 25 to 30 million metric tons of wheat that needs to work into the feed ration. The question is, how much milling wheat do they need to import? The USDA, when we look at it, they left the imports at 12 million metric tons, unchanged from the previous report. And we'll see if they have to import any more. Small declines for feeding for Australia and Canada. On the export side, probably the biggest difference was Russia went up 1 million tons, Australia up 500,000 tons on the increase on exports. But we saw declines for Canada and Argentina. So we talk about our major exporters, and we look at Canada. It's going to be pretty easy to see where their exports could go if the production continues to drop. Just world wheat bob prices. I put this chart in here this time to look at it because we can put Ukrainian on here. Now, the one thing about this Ukrainian bob prices and the decline or the end of the grain export corridor, it's going to force these prices lower. So you're going to continue to see some cheap bob Ukrainian wheat trading, whether it's through the Danube, whether it's rail, whether it's truck, with the lack of any seaborne exports if the Russians choose to stop it. So this is Russian wheat down here. You can see Russian, Ukrainian wheat, and this is French wheat here. But the thing to look at is this is U.S. hard wheat, continues to be well above the market. And Gulf soft wheat is on par. And actually, I just looked, and Gulf soft wheat is cheaper than French wheat tonight going home. So I do think we're seeing some export business show up for soft wheat out of the Gulf. Question is it China or is it just Latin American demand? Ending stocks, world ending stocks were down 4.5, 5 million tons. It's down in China, Russia, EU. Stocks were up in North Africa and the U.S. And you can just see the chart that shows the 4 largest stocks countries. So quick look at Russian wheat production. Like I said, we're down around 85 million metric tons of production. I think the trade's gravitating to that level, so I think the USDA is in line. But the problem is we're still dealing with what they didn't take into account last year. And you think about stocks, are they 6, 8, 10 million tons higher in Russia because of the production the USDA did not account for in last year's numbers. For the Ukraine, production, I've actually seen some higher numbers in this than the USDA's got. I've seen some 18, 19 million, maybe 20 million metric tons of production numbers. But, question is, what can they export? And they'll get out what they can, but what's the long-term projection for wheat production in the Ukraine if the producer has to take lower prices, has to pay more transportation, has to pay more for inputs, what's the long-term view of acres over the next 3 or 4 years for that production? I threw this in here just because we're ending the grain corridor, export corridor. So it's pretty easy to see the red bar shows how much grain was moved through the Ukrainian ports. So it is significant. I think that people are talking about this export agreement ending and it not having much of an impact, but you were seeing 2 to 3 million metric tons a month move through that corridor when it was running at good pace. So are we going to try to shove all this grain through the Danube, through rail, through trucks? And you can see these are the totals this year, 32.8 million metric tons. Of that, 51% was corn, 21%, 27% was wheat. And you can see the wheat destinations here. Most of the corn went to China or the EU. This is going to raise an interesting question. So on EU corn production, with the heat that's coming in the southern Europe over the next few weeks, are we going to see an issue with corn pollination and corn production in the EU? Well, last year the EU got a lot of corn out of the Ukraine. So EU basically doubled their corn imports last year because of shorter crops, but they were able to import Ukrainian corn with a vast majority of what they were bringing in. So if that corn can't get there, or if it's a shorter crop, are they going to have to import more Brazilian corn? And you can see the meal and the other exports. EU production, just throw this up there, it's going to be a good crop. The production was down a couple million metric tons. It'll probably drop a little more. The main areas continue to look to be the Nordic states. French production looks pretty good. The Germans continue to drop their crop, and I've heard mixed results in Poland on the crop there. But we're still going to have pretty decent sized crops in the southern Balkans, and that'll hit the export market and the feed wheat market. So let's talk about Canada. So the big thing is the USDA kept Canadian wheat production around 35 million metric tons. A jump from last year, well off of 2021. And this is what we need to be thinking about. And you can see carry out. So the way I'm looking at Canada, I threw this map up here. So if people aren't familiar with Canadian wheat production, this is the prairie areas over here. You can see the amount of spring wheat production in Alberta and Sask and in Manitoba. In Ontario over here, this is soft wheat production. There's a little bit of hard wheat along the border here. But this is also the Durham areas over here. So when we talk about Canadian, we talk about Durham, spring wheat, a little bit of winters, and a little bit of soft. So these are the vegetable health index maps. This is the current year, and this is a year ago. And you can see the big difference over here in the prairies on the health of the crops versus a year ago. Now, I did look at the 21 maps to compare because that was the last real short crop year. And the difference was all through here was bad when it came to the 21 crop. Manitoba was bad. All of eastern Saskatchewan was bad. And they're not that bad this year. So we're going to see some decent crops over here so far. If we look at these weather maps, they turn hot, dry again. So we may see some issues start to pop up because of that. So let's think about this. This is my only death by PowerPoint on this presentation. It's my only spreadsheet. I hate when people put spreadsheets on PowerPoint, so I try not to. So let's take a look at this. So these are the acres. These are the acres that the USDA has over the last, I've got it for the last 20, 25 years, but I isolated it back to the last 15 years. So if you think about the last 15 years of average wheat production, they average about 3 million tons a hectare. So if you take the acres the USDA is using, you come up with a 32.2 million metric ton crop. That is all wheat. That is Durham, Springs, and winters. So I took this number and plugged it into the balance sheet versus the 35 million metric ton by the USDA. And the thing I want you to take from this, once you get down to about 32 million metric tons, exports have to drop to 24, 25 million metric tons. Keep carry out to use at recent levels. So of this 32 million metric tons, I'm plugging in about 5.5 for Durham, about 26 and a half for springs and the balance on winters. The issue is if you take this down to 30 on continued crop issues on the yield side, basically you have to do a 1-for-1 move drop down on exports. So if we drop this crop to 30, you almost have to drop exports down to 22. And we've already got a durum problem in the world, and we'll talk about that when we get to durum. But the other thing I did is I just took, if we had 100% of an average, I took 20% or 90% of an average, that's 2.74 tons a hectare. And then, interestingly, I took 80%, which is the exact yield we had in 2021 of 2.44 metric tons a hectare. I don't think it gets that low, but it could certainly wind up anywhere from this 3 to 2.75 million metric ton a hectare. So Canada's got a problem. We're actually in probably the worst time frame for them. But this last half July, first half August is the time frame they really make their crops there. And like I said, these maps, there's some rains in the maps in through the weekend, then they turn off hot and dry. I kept this map in here, just this graph to look at. It just shows the percent of spring wheat production compared to the balance of the rest of the world production, less China. And spring wheat's a small component from a percentage wise, but it's a huge component when it comes to the milling sector. The other interesting story we've got is India. So India's got a bit of a problem with their monsoon. And one thing we saw last week was a lot of talk of spot rice prices running up in India. And we were able to grab this and chart it. And you can see rice prices did make a big move in India. So why we worry about rice prices? Because it's just a carbohydrate, right? So we want to see what Indian spot wheat prices are doing. So we're seeing spot wheat prices move up too. Now there's two camps on Indian balance sheets. There's the camp that says that the USDA and the Indian government are right, using 113 million metric ton crop, I think. And then there's the camp that says the crop's 5 to 10 million tons lower than that. So if this price keeps moving up and the rice price keeps moving up, they're probably going to have to do something to stimulate imports. Right now, there's an import tariff on all wheat imports into India. That'll be the first thing to watch for if they take that tariff off. And then we can see if they start to buy a little bit of wheat. But it's also elections over there pretty soon. So we could see some political ramifications of inflationary prices on the political parties. So they may, do what they need to do to keep the vote, so to speak. And I did throw in the food inflation index, jumped almost 2.5 points from May to June in India. We'll see what it does in July, but I also give you a perspective on what food inflation has been in India over the last, back to 2012. Nowhere near where it was, during COVID, but it's on an uptrend, and I think that the politicians will be a little concerned about that. Talk about U.S. wheat real quick. I'm making good time. So yeah, we got our July crop report, and we get our first real breakdown of not only all wheat production, but a breakdown by class. This left chart on the left shows acres. This is all wheat acres. The trend continues of less and less acres as farmers shift to more profitable crops, but we did get a nice bump in planted acres this year. We're up almost 9% overall, but harvested acres are still lagging because we're going to run into a real problem with hard wheat on the harvested. All winter wheat was up 11%. These are the acres for hard wheat, soft wheat, and white wheat. All spring wheat acres was up 3%. HRS acres were unchanged. Probably the big thing for a certain group of people was the decline in durum wheat, and we'll get into that. But the world's got a problem on durum production. U.S. is down, Canada's potentially down. The EU's got a problem, especially in Italy, on durum production. Mexican durum production is going to go down. My colleague Juan Hinojosa, I had a good discussion about that. Mexico produces a lot of high quality, good durum wheat that flows off their Pacific Coast ports into Europe specifically and into North Africa. But they've had some awfully good rains there. So the area that durum wheat is growing is probably going to see a lot more corn go into production because the producer can just make much more money. So you look at all wheat production, we're up almost 5%. Winter wheat was up 9%. You can see hard wheat was up 8%. Soft was up 25%. White was up 10%. For the white wheat, soft white was 196. Hard white was 11. Spring wheat production was down. This is all spring wheat down 1%. HRS was down 1%. You can see the balance, but durum wheat's down 16%. I'm actually okay with almost all these USDA numbers. I was a little lower on hard wheat. I'll probably keep a little lower for now. Soft wheat, I think their number's pretty good. White wheat, I think it's pretty good. I think their number for spring wheat right now is pretty good too. And durum, we're just going to go with what they've got, just because I don't have the contacts really in the durum world, other than a few people I talk to question what they do. So this is the winter wheat plantings. Just a quick map to look at it. You can see of that 2-point increase in hard wheat, 11% of that, up 11%. 54% of that was in Oklahoma, Texas, and Kansas. Soft wheat acres, 42% of that 16% increase was in Illinois, Indiana, and Ohio. So these are the tributary to the delivery markets. I think that's important to watch. We have good crops in Kentucky and Tennessee. Soft white acres were down, and Montana was down on winters too. Yields, they're probably okay. We'll see where they come in at. One thing we do, we built a model to see if we can do a good job of modeling how these yields evolve through using index scores. So right now the government's got hard wheat at 35.4, the trend's 41.89. Our model's at 37.28. We'll see how these things are at the end, and we'll go back and back test them and figure out where we can improve them. Soft wheat, government's at 71, trend 71, we're at 70.5. And white wheat, we don't keep a model for that. That's just probably not a good thing for us to try to attempt. But the soft wheat is, or the white wheat is 60.1 bushel is what they've got. Let's see, winter wheat production. They've had 577, and of that 577, 433 of it was in the 5 plain states: Nebraska, Colorado, Kansas, Oklahoma, and Texas. So the vast majority of the production is always down here. 119 million up in the northern plains. On the soft red wheat, 32% of the production was in the 3 states: Indiana, Ohio, and Illinois. Now Michigan, it's going to be interesting because Michigan's got a lot of rain the last couple of days, and last year, that crop split between about 64% soft and 36% white wheat last year. And I think the white wheat is higher this year. On the yields or on the production side. Crop progress, looking at wheat or wheat harvest, this is where we're at as of yesterday. Soft wheat's pretty well done, except for Michigan, like we said. The southern states are on hard wheats are all running behind pretty much. Colorado's way behind. Just getting started up here and just getting started over here. Spring wheat acres, you can see they're down. They're up overall. Down a little bit in Minnesota. North Dakota was up. Montana was up. A little bit down over here. Spring wheat yields down across the board, except for Montana. They're probably going to have a little bit bigger spring wheat crop, plus the acres are up. We'll see how these yields turn out, but I think the USDA is pretty good on their yield when it comes to the overall side of it. Wheat production, little decline up in North Dakota, an increase in Montana. Overall increase is down. Overall crops down a little, but not too much from last year. And now this is what we've been looking at is we looked at those Canadian veg health maps. We look at the U.S. maps. Last year we were at 71% good to excellent on the ratings. This year we're 51%. So where are we going to wind up? We had a big jump from last week in Minnesota. Pretty good jump in North Dakota also, but a decline in Montana. But the crops getting toward the end of the productive life cycle. A lot of heat coming in the next 2 weeks. Probably won't hurt it too bad. And we'll just have to start to see when we see some harvest results. Durham, I just threw these charts up there. Durham's down 54 million, but you can see there's only two states where we go a lot of Durham, North Dakota and Minnesota. A little bit of desert Durham, a little bit in California, and you can see the acres. Wheat stocks were interesting. They came in below the trade guess and implied higher feeding. So the USDA incorporated that in their 22-23 balance sheets and increased wheat feeding. We estimated the stocks by class of hard wheat at 260, soft at 90, spring at 155, and white wheat at 74, Durham at 24. So we'll take a pretty, now the one thing I do want you to take from this is look at Kansas. These stocks are low. So you take 100 million stocks and a 200 million crop, you got 300 million bushels here, not only to feed the domestic meal market, the meal markets to the west, the meal markets to the south, but also the delivery markets. I think it's going to get, I think people need to pay attention to what the delivery stocks do as we move later into the year, and I've got some stuff to look at that. So this is interesting. So I took the on-farm wheat stocks chart, which we showed on-farm wheat stocks growing at 124 million bushels, up 31 million bushels. But then we look at the off-farm stocks, and this is the commercial hedger. Guess what they did? They sold it. There's no carries in the market, right? So what do you do when there's no carries? You don't carry it. So the farmer is the one that's carrying all these unhedged bushels or hedged bushels into either an inverse in the hard wheat, small carries into spring wheat, or carries into the soft wheat market. So again, this is our total use in the blue line versus production. We are seeing a bit of an increase in production, but still below what we're using. This trend has to stop. Either we have to stop using more, or we have to start producing more. And the trend right now is to use less because we're just going to export less. You know, the blue lines, the total demand is for food. This is exports. You can see exports on decline, and this is feed on the orange one. Export sales are crappy. Probably going to stay pretty crappy. You know, exports. U.S. is just priced out on everything except for soft wheat right now. White wheat's priced out. Durham's probably going to get a little business. Spring wheat, we're going to have to ration off. The Canadian exports, if they can't export part of it, we may get part of those. But overall, exports are going to stay poor. I did update this chart, shows U.S. wheat exports going back to the 1990. You know, 725 is the lowest that we've got. And we're down to under less than 9% of global share of exports. So overall, ending stocks are going to increase a little bit. This is the USDA number. I actually think they're too low. They're probably 20, 30, 40 million bushels too low on ending stocks. But I think they're too high on exports. But for now, we're going to use their number and just look at it from a chart perspective. But carryout remains somewhere around 30 to 32, 33% carryout use. Look at some by class stuff. We got, like I said, we got our first look at by class carryouts, and this is where hard wheat carryout is, spring wheat, soft wheat, white wheat, and Durham, and you can see carryout to use ratios over here. I'd rather look at those, but I wanted to put this one up here in this report. You know, carryout to use goes up in hard wheat, goes up in soft wheat, declines in springs, which I think is okay. White wheat declines and Durham declines pretty dramatically. Talk about hard wheat real quick. This is the hard wheat acreage. This was the big bump we saw at acres was hard wheat. But again, we're going to have problems with this harvested acres because of the problems in Texas and Oklahoma and Kansas, a little bit in Colorado on the abandonment acres. I think the USDA is probably too high on their harvested acres, but they may be a little low on their yield when it's all said and done. But demand, you can see record low wheat exports. I think if you read the WASDE report, they said these are the lowest exports since we've been keeping records for hard wheat. And I actually think they're too high. I've got exports at 190. The number I'm using is closer to 160 for right now. And feed wheat was up last year, but it's down again this year. So this is what I did. I took last year's hard wheat exports to think about. So this is our export program on hard wheat last year. Mexico's 30%, Japan 17%, Korea, and Taiwan. But those are the big ones. We'll probably continue to see exports, but you have to think we'll lose market share in Nigeria to Russian wheat. Brazil will be the outlier. We may pick up some extra business going into Brazil, but will we eclipse that 188,000 tons last year? Probably not. But I do know we've sold some, or I don't know. We've been told that there's been some hard wheat purchases by Brazil over the last few weeks. We'll just have to start to see if those show up in either in inspections or in the export sales report. So are we going to do Iraq business? I don't think so. There's no need for that. The other one that we're going to miss is the CCC business, because right now we're not doing any CCC business to Ethiopia for some governmental issues. So it's pretty easy to see losing another 20, 30 million bushels of exports just because of we're not going to fit a lot of places other than our traditional trade partners. I wanted to throw this up here just to give people a view of where Kansas wheat production is. At 200 million bushels, it's down significantly. We've been lower, but we also rallied back the next big year. This is why I want to show this. Short crop, big crop, short crop, big crop, short crop, big crop. And we're moving into this El Nino. So we should see a significant rebound in Kansas wheat production year over year. Acres will probably be up. We're going to go into planting season with plenty of moisture. So we could see a significant increase in Kansas hard wheat production next year. Just looking at balance sheets, I lied. I do have two spreadsheets in here. My apologies. This is the USDA carry out to use. I'm just going to use theirs for today. They've got carry out to use about 227 million bushels and about 38% carry out to use. My number's closer to 265 and closer to 48% carry out because I've got less exports. I'm using a little smaller crop, but I've got a little bigger imports, just kind of knowing what I know on that side. And we could talk about that. You know, we're starting to see the first real imported wheat hit the market. You know, Arden's been taking stuff into Tampa all year or since March. We've got our first vessels down in Houston. I think there's a vessel down in the Gulf unloading at the transloader down there. Probably barge some stuff up to St. Louis. The USDA went to 15 million on their import side. I've got mine at 20. But like I said, my carryout's considerably higher, and it's all about this export number. Can that change? Yeah, sort of, kind of, maybe. We'll see. Just looking at prices, I told a couple of my flour millers today that I think anytime you get Kansas City wheat, whether it's the Sep or Dees or March under $8, you got to do some pricing, just from a consumptive perspective. I think the range on KC wheat's still somewhere around 775 to 875 from a price perspective. I just think we're going to see support under the market through the other wheats and just the overall shorter stocks we're going to be carrying in and carrying out year over year. Basis has been on the defensive. I don't see that changing much. We did see a pretty good bounce today. I don't have it reflected in this chart, but the high side was up anywhere from 15 to 30 cents today. But I think the market's been underpriced a little bit. I don't think it needs to rally a lot. But we could probably see basis rally another 10, 20 cents, 30 cents pretty easy. This is the 12 Pro chart across KC. I think probably the 3-year average is a pretty good one to look at from a historical perspective. You know, we almost always rally basis in November, December, and peak out and start to decline into the rest of the year. And then we'll have to deal with these inverses later in the year also. Deliverable stocks. I updated this today. I think this is a big story. So the thing that surprised me today was the decline in Salina stocks. So you would think with harvest ongoing, we'd see a big influx of delivery stocks. We've seen a pickup in Hutch. We've seen a pickup in Kansas City and in Wichita. But this is a pretty big decline. This is where we're at year over year. Historically, it may be tough to get these delivery stocks up to 40 million bushels. If that's the case, that has spread and basis implications later in the year. Like I said, I'm a little bearish on spreads front end. This is the Sep Dees We traded out to 5 today. We got some stuff done at 5. Can it go a little wider? Yeah, I don't think it goes much wider than 8. That's kind of been my range, 5 to 8 on the weak side. But I think we could probably firm this thing up as we get closer into September. Depends what the farmer does. If we'd rally futures back up to 850 on SEP, we'd buy a bunch of cash wheat, and that might help keep a little pressure on the spread. I do want to point out July 24 wheat for any producers on here or people that are thinking about next year. You know, the high's been $10 black last year. We've been up to close to $8.50 this year. Anytime we get above 8, 8.25, 8.75, 8.50, people need to be thinking about selling some July 24 wheat. And this is the forward curve. You know, we know it's got a small carry, significant inverse going past Dees right now. Dees March is at, this chart's a little old because Dees March actually is a little bit of a carry today. But anything past March is inverted. So spring wheat acres, a bit of a tick up overall. HRS was unchanged. Spring wheat demand, we're seeing an uptick in food use. This is more blending in the hard wheat flours. This is going to depend a lot on what the KC Minneapolis spread does, Minneapolis KC spread. Exports are down and feed usage is flat. So I take the same chart. Where are we going to export spring wheat next year? Philippines, Mexico, probably. Japan, yeah, Taiwan. I think we'll do our traditional business. Probably won't be doing this Iraqi business. I don't see why they buy U.S. wheat. Probably not doing a bunch of Egyptian business unless they just need some quality. So you could see the USDA is probably okay on their spring wheat export estimate right now. Carry out, I'm using USDA numbers for now. They're close enough to mine not to mess with. So carry out drops a little bit, carry out use drops a little bit. Still fairly snug. And the Canadian problem on the export side could change this a little bit, and we could do a few more exports. Spring wheat futures prices, kind of 8.25 bottom side, I think is probably a good place to look at from the consumptive side. I think futures have a range of probably about 8 to 9, maybe probably 8.25 to 9.25 from a range for the next couple quarters. But you can see the markets dip down from where we are at. I do think we need to be careful on this Canadian production thing. And also on durum, there's no good way to hedge durum. But if you're a durum end user and you need to put something on, you're going to put on Minneapolis futures. You're going to get long Minneapolis futures or some form of Minneapolis option trade from a long side. If the correlations are not there, I'm not going to tell you they are, but it's a proxy for not being able to buy cash durum wheat. So that might add a little more volatility to the market. KC Minneapolis spread, this spread got out to about 64 yesterday. It got hit pretty hard today, but this is a weekly chart. So anytime we get this Minneapolis K over KC, get 50, 60, 70 over Minneapolis over KC, that starts putting hard wheat back into the grinds. We've got a real high protein hard wheat crop this year. So the miller can switch back to more hard wheat pretty easy just because of the proteins that are out there. So if we do see a problem with Canadian production, we'll probably see this Minneapolis KC spread stay pretty strong. I like buying this thing on breaks, but like I said, there are no positions, there are only trades. So if you put it on, you take it off when you like it. Spring wheat basis, this is where we're at. Pretty high actually, above the 3-year average. And this is also impacting this Minneapolis KC cash market substitution for spring wheat versus hard wheat. So we may follow this pattern from last year, especially if we have a little smaller production in Canada. Depends how the demand plays out. Now, deliverable stocks in Minneapolis are low too. We looked at KC; these are pretty low. That's just something else to think about how we see the year evolving when it comes to delivery stocks. Soft wheat, real quick. Nice tick up in acres. Going to be a nice crop. We've got big production because of good yields and higher acres. So this is food use. We've ticked food use up because of substitution in hard wheat grinds. Exports are up. This may be up even a little more. Feed wheat, we're nowhere feeding a lot of soft wheat. That was started feeding in April, May, June, July. Will that feeding continue into the next quarter? Probably a little, and then it'll taper off with the new crop corn. But the one question we may be asking ourselves next spring is, how do we underestimate soft wheat demand so much? And just because it's cheap, it's good quality crop, and it's readily available in very accessible transportation and logistic corridors. So this is what we did on soft wheat exports last year. I don't see this changing much. China will be the wild one. We did 6% of our exports last year were to China. It's priced right. We could do more business to China, especially if they need to buy more quality wheat. The rest of these we'll probably do. We've been selling a little Brazil. I don't see this changing much. So we'll probably, I think we'll exceed the USDA number, mainly because of demand for Latin America and some of the other countries. But always remember, everybody loves crackers, man. Got to have soft wheat to make crackers. I'm just using the USDA numbers on carryout to use. They're pretty close to mine. So carryout ticks up significantly, but we're still below 150 million bushels. That's kind of my number to trip when it comes to VSR. And we'll talk about that when we get to spreads. Talked to some guys today. I think anytime you can buy soft wheat down around 6 1/4, it's probably a value. The first time we did this, we looked at soft wheat below $6 as a value. We got down there pretty close. I think the trading range is going to be 6 to 7. I don't see us needing to exceed $7 unless we see something significant happen in the Black Sea or a headline that could drive more demand to the U.S. KC Chicago wheat spread. Everybody's been trading this. This was all driven by the fund selling in Chicago off the Ukrainian crop deals or export corridors. So that's out of the way. We've seen this thing, that thing traded up to almost 275 over KC over Chicago. It's backed off. It's kind of trading mid-range now. Like buying breaks, but selling rallies in that one. This is Fostoria. This is a soft wheat basis in Fostoria. You can see we're below historicals, got big carries. I did look at Mondelez today, look at their bids. So the spot bid for Mondelez in Toledo, basically you look at the nearby bid and you look at the March, the JFM bid, there's 55 cents worth of carry between the futures and the basis improvement. So the market's paying carry in the soft wheat market, whether it's in the basis or whether it's in the spread. Not a lot of fun for the miller, but good for the commercial grain hedger, and actually good for the farmer too. So Chicago delivery stocks have spiked up significantly. We're going to see big delivery stocks, and that gets into the VSR question we'll get to the next slide. The Ontario crop's got a little bit of a problem. I think that we've got some falling number issues up there, some test weight issues, some sprout. So you can see some off-grade quality soft wheat out of Ontario not making it into the export market, but working to the delivery markets in Chicago. So I don't see these stocks doing anything but stay big all year. So let's talk about spreads. This is my calcs as of when I did this. So you look at the SEP-Ds, 80% of full carry is 22 cents. So we need to see the SEP-Ds starting tomorrow. That's when the VSR calc period starts. We need to see that spread, trading around 22 cents out to 80% to full carry to get the VSR kicked in. So I put the chart over here. This is just the seasonal chart for the SEP-Ds. Like I said, let's see if we get out to 22. I don't know if we'll get a VSR leg in here or not, but we'll be watching it pretty close. Like I said, we'll be able to watch it pretty easily through the VSR calcs the CME puts out. But if we do get a VSR leg, it'll be because of the stocks that are coming into Toledo. White wheat, real quick. Acres are up, but harvested acres are going to be down. They've had a pretty bad drought at the PNW. Not much to talk about here. Total supply, production, carry-in. The demand side, we'll probably see exports down a little bit, food use flat, no food use. White wheat balance sheet's tight. It's down significantly on the carryout. Carryout to use is not as low as it was, just because we don't have as many exports plugged in. But we need to watch Australian production going forward and how demand for U.S. white wheat evolves. Durum, let's talk about the D word, the durum. Planted acres are up, harvested acres are down because of the weather. So when you look at durum production, this is the blue line. This is how much we import. We're going to import as much as we produce this year on the durum side. And that's Canadian durum. So if we see a production issue in Canada, what's this do to Canadian durum imports into the U.S.? This is the export side, and this is food side. It's pretty easy to ration off durum exports in a normal year. But if there's a problem globally with durum production, how easy will it be to ration off these durum exports? Ending stocks are tight, but not tight as they were in 08 and 09, but it's going to be an interesting game for the folks that trade durum. It's a flat price market. I've heard bids already 10, 50, 11 bucks for new crop durum over Chicago. So this is a market that's going to evolve over the next 3 to 6 months. So I'm going to get this thing finished. So summarize. Russian EU wheat's going to pressure the front of the cash in the futures market. U.S. same story. How much inelastic demand do we have? Our domestic demand is pretty static. The short white wheat and durum crops are going to be a problem, but long term we're going to continue to see less acres. That comes down to, are we going to wind up importing more milling wheat? This year is the first year that someone actually made the commitment to bring in offshore wheat. I'm not talking Canadian, but this EU wheat that's working in this Polish, German wheat. I think there's been a little bit of a backlash against it, but this may be here to stay and people may have to figure out how to use it. Like I say, we're not done with the Northern Hemisphere growing season. We still got to get through the Canadian production, Russian spring wheat, and get through the European crops. Southern Hemisphere weather, some issues. It's better in Australia than we expected. They go into their dry time frame now. Argentina's seen some rain, but acres are going to be down because of the lack of planting because of that. The global demand thing's still going to be the biggest question. Do we see an issue with the high cost of commodities and interest rates keeping the importers out of the market? Do they continue to stay just in time? Do they continue to destock? Like I said, our outliers are going to be Canadian, U.S., Russian spring wheat production. China, they had a problem with their crop on quality and production. How much more are they going to have to import? Is 12 million tons enough? We've got this Indian thing starting to develop. We'll keep a pretty close watch on that. We talked about GMO a little bit in the last one. I'm not going to talk about that too much. Other than the fact is, it's out there. Are we going to start to see more and more people want to grow GMO wheat? So with that, I'm going to end it. And we've gone through about our hour. If you have any questions, just send me an email. I'll answer them if I can. And that's it. Thank you.
Thank you so much, Mike. Have a good night, everyone. Thank you.
Thank you.